Welcome to the Deep Dive. We're all about cutting through the noise, giving you the insights you need. A really tailored for you, our listener. We try to make it engaging, maybe even a bit fun.
Exactly. And today we're diving into the Supreme Industries Ltd, specifically their financial results for the first quarter of fiscal year 26, the period ending June 30th, 2025.
Right. Our mission here is simple. Unpack the key numbers, understand what's really behind them, and look at the bigger picture of the company's strategy. We want to go way beyond just the headlines.
And to do that, we've dug into the source materials. We're talking the independent auditor's review report, the investor presentation, and of course, the official press release. So this isn't just a summary, it's a synthesis.
Okay, let's get straight into it then. Q1 for Supreme. Well, it presented a bit of a fascinating puzzle, didn't it?
It really did. Some numbers seem to pull in different directions at first glance.
Yeah, like revenue. Came in at 2609 crores. That's actually down just slightly, 1.03% compared to last year.
Down slightly. But then you look at sales volume.
Exactly. Volume was over 183,000 metric tons. That's actually up 5.73% year over year. So selling more stuff.
But making less revenue overall. And then there's the profit picture. Operating profit, the EBITDA, was 319 crores.
Which is a pretty notable drop, down 17.67% year over year. So higher volume, lower revenue, significantly lower profits. Interesting.
It is. And you know, this kind of mixed picture isn't totally unheard of, but it definitely makes you ask, okay, what factors are causing this? Selling more but earning less per unit, essentially. What's going on there?
Before we unpack the why, let's quickly touch on the auditor's report.
Yeah.
This was from Loda & Co. LLP. They did a review, not a full audit.
Right. It was under what's called SRV 2410. Basically, it gives moderate assurance. Think of it as a solid checkup, gives confidence, but it's not the deep dive of a full audit. Important distinction.
And their conclusion?
Pretty clean, actually. They said, nothing has come to our attention that causes us to believe that the accompanying statement contains any material misstatement. Standard language, but reassuring.
Okay. They did mention a small caveat, something about figures from March 31st being balancing figures.
Yeah, a technical point from a prior review. Not a full audit of those specific end-of-year balancing numbers, but crucially, they said their overall conclusion wasn't modified because of it. So, bottom line, the Q1 numbers look reliable.
Got it. And the company reported both standalone and consolidated results. Consolidated P8, profit after tax, was 202.30 crores.
Which was down 26% year over year, and the consolidated earnings per share was 15.93.
So similar trend on the consolidated side.
Very much so. Slight differences in the exact numbers, of course, but the overall story, that trend of lower revenue and profit despite higher volume, holds true whether you look at standalone or consolidated. It reinforces the picture.
Okay, let's unpack that core puzzle then. Selling more volume, but revenue is down. How does that work?
Yeah, this is where the commentary from the managing director, Mr. MP Taparia, becomes really key. He pointed directly to polymer prices.
Ah, the raw materials.
Exactly. He said they remained in an affordable range, but crucially, PVC prices specifically were in a downward range.
So the price of what they sell went down.
Effectively, yes. And this led to what they call inventory loss affecting profitability. Imagine buying raw materials when prices are higher and then selling the finished goods after the market price for those materials has dropped. Your margin gets squeezed.
Right, so even selling more units couldn't offset the lower price per unit, plus maybe some losses on inventory they held.
Precisely. It's a classic margin compression scenario in a business sensitive to commodity prices. Even strong demand can't always shield you when input costs, or rather the selling price linked to those inputs, fall sharply.
That explains the revenue versus volume piece.
Yeah.
But the profit dropped nearly 18% on EBITDA. Feels like more than just price. Were costs also going up?
Good question. Yes, absolutely. If you dig into the income statement details, you see other pressures. Employee benefit expenses, for instance, were up 11.25% year over year.
Okay, that's significant.
And other expenses also rose by 10.26%. So you had the pressure from lower selling prices linked to PVC, plus rising operational costs.
Double whammy.
Exactly. And that flows directly to the operating margin. The EBITDA percentage fell from 14.7% in Q1 last year down to 12.23% this quarter. A clear squeeze on operating efficiency.
Let's look at the different segments quickly. How did they perform?
It varied, which is also interesting. Plastic piping products, that's a big one for them, saw volume go up. But both revenue and EBIT, the operating profit for the segment, were down.
Okay, aligns with the PVC price story.
Right. Industrial products,
Yeah.
similar story, volume up, revenue and EBIT down. Packaging products, though, that was a bright spot. Volume up, revenue up, and EBIT up, so that segment performed well.
Good to see. And consumer products.
Consumer products, volume up, revenue up slightly, but EBIT was actually down. So another mixed bag there, maybe different cost pressures at play.
So if you connect the dots,
Well, it really highlights the impact of that raw material volatility, especially for piping and industrial segments. But there's another factor Mr. Taparia mentioned specifically for plastic piping,
what was that?
the monsoon. He said there was a 20 days early break of monsoon, which hit the agriculture piping system business particularly hard.
So demand in a key part of that segment dropped off earlier than usual because of the weather.
Exactly. So even for a giant like Supreme, something like the timing of the monsoon can have a real tangible impact on the bottom line for a specific important segment. It shows how external factors play in.
Interesting. Now, despite these profit hits, one thing stood out, their cash position.
Oh, absolutely. They reported a net cash surplus of 856 crores as of June 30th.
Which is still very strong, even though it's down a bit from March 31st when it was 944 crores.
Yeah, but having that much cash on hand, especially in a quarter where profits were challenged, is incredibly important. It gives them stability, flexibility.
And firepower for strategic moves.
Exactly. Which brings us neatly to the next part of the story, what they're doing for the future. Because they've announced some really significant things.
Right. Starting with a major acquisition. Tell us about that.
This looks like a really big strategic play. It's two-pronged. First, they're acquiring Industries Ltd and two subsidiaries. That deal is worth about 310 crores,
Okay.
and it's expected to close very soon, like by the end of July 2025. But that's not all.
What's the second part?
They've also signed a separate master technology license agreement with Waven BV in the Netherlands that's part of the Orbia Group.
And what does that give them?
It gives Supreme exclusive access in India and other SAARC countries to all of Waven's plastic piping technologies existing, and new ones specifically for building and infrastructure. And that's for 7 years, starting August 1st, 2025.
Wow, so they buy the Indian operations and get access to the parent company's tech.
Precisely. The company stated the goal very clearly. This whole arrangement would take the business of the plastic piping division to a new scale in terms of capacities, market reach, and product offerings. It sounds transformative for that division.
That does sound like a potential game changer, hitting capacity, market reach, and technology all at once.
Yeah.
But big acquisitions like this, they always come with risks, right? Integration, maybe overpaying, market reaction.
Absolutely. That's a very important point. Integration is always the key challenge, blending systems, cultures, making sure 1 + 1 = more than 2. And ensuring the market actually absorbs the increased capacity and adopts the new tech profitably. These are real hurdles.
So how are they addressing that? Any indicators?
Well, one huge indicator of their confidence in financial health is how they're paying for it all. We'll get to that in a moment, but spoiler, it involves that strong cash position we mentioned. That definitely mitigates the financial risk significantly.
Okay, interesting. And it's not just this big acquisition, they're also expanding organically.
Yes. Ongoing capacity expansions in plastic piping beyond the Waven deal and also in protective packaging. Plus, they're setting up a whole new unit for material handling products in Malampur, Madhya Pradesh. So growth on multiple fronts.
And new products coming online too.
Definitely. They mentioned a new PP silent pipe system that's using tech from an Austrian company. Poloplast is in trial production now and should hit commercial production next month.
Okay.
They also fulfilled their first order for PE pipes for gas applications. And this next one is quite crucial. They received DVGW certification from Germany for their electrofusion, or EF, fittings.
Why is that so important?
Because according to the company, this makes Supreme the only company eligible to produce and supply both pipes and fittings for gas in India under this certification. That gives them a unique competitive edge in that market.
That is a big deal, a real differentiator.
Yeah. And they also mentioned their profile window project is moving along. Trial production expected this quarter, Q2, initially targeting UP and the NCR. So lots of innovation and expansion happening simultaneously. It really speaks to their innovation virtue.
All of this, the acquisition, the expansions, the new product lines must cost a fair bit.
Oh, yes. They flagged a total planned cash outflow for the year of around 1,350 crores. That covers existing plans, the big Waven acquisition, and other new commitments.
1,350 crores. That's substantial. How are they funding that, especially after a quarter with lower profits?
And this is the point I alluded to earlier, and it's really quite remarkable. They stated very clearly, entire CapEx shall be funded from internal accruals.
Wow, so no new debt, no issuing new shares. They're paying for all of that massive investment straight from their own cash flow.
Exactly. Despite the dip in Q1 profits, their underlying business generates enough cash to fund over 1,000 crores in expansion and acquisition. It underlines their financial strength and, you could argue, reflects that integrity virtue in their financial management. It's impressive self-reliance.
Very impressive. Now, looking ahead at the segments, any specific growth targets mentioned?
Yes, they highlighted the protective packaging division specifically. They're targeting double-digit volume growth for the full year
Ambitious.
and aiming for revenues in that division to cross 1,000 crores for the year. That would be up from 855 crores last year.
What's driving that confidence in packaging?
They pointed to significant new orders for their composite LPG cylinders. They landed a big one, 2 lakh 10 key longa cylinders from BPCL,
Okay.
and also a repeat order for 2.31 lakh cylinders from IOCL. These large orders will really help fill up the expanded capacity they've built in that area.
Got it. And what about the overall economic outlook? What did the MD say?
Mr. Taparia sounded, well, cautiously optimistic about the Indian economy overall.
Based.
He mentioned the good monsoon rainfall across most parts of the country, saying that augurs well for the economy. He expects continued good demand for housing and agriculture.
Both key sectors for Supreme.
Absolutely. He also noted that inflation seems to be coming down, and with the government's commitment to boosting infrastructure spending, they believe demand from that sector should also pick up, so they seem to see some positive tailwinds ahead.
Okay, let's zoom out a bit from the quarter and look at the company itself. The Supreme Group, give us the quick profile.
Sure, I mean, they are huge. India's largest plastic processor, founded way back in 1942, so they've been around for over 80 years.
Wow, long history.
Yeah? 8 business verticals, 30 manufacturing plants dotted across India, exporting to 54 countries. Their market cap as of June 30th was over 55,500 crores. And they have a strong credit rating, AA plus stable from CRISIL.
What would you say are their key strengths, their USPs?
Well, definitely that diversified portfolio. They're not reliant on just one product type. Strong brand equity built over decades, significant market share in pretty much all their segments, and as we've seen, very strong cash flows allowing that internal funding. Plus, a massive pan-India distribution network to get their products everywhere. That foundation is solid.
They also talk about their vision and mission.
Right. The vision is to grow business with dignity and respect, and the mission is to add real value to society. Pretty standard corporate statements, perhaps.
But they also list specific Supreme virtues.
Yes. Things like empowerment, delivering excellence, innovation, people first, customer centricity, and integrity. And, it raises the question, how do these actually show up in practice?
We've seen some examples already, maybe.
I think so. The investment in the Waventech and the German gas fitting certification definitely speaks to innovation and delivering excellence. Funding everything internally arguably links to integrity. Even the rise in employee costs while hitting profits short term could be seen through a people-first lens. So maybe they're more than just words on a slide.
They also emphasize sustainability quite a bit.
They do. They state they're committed to sustainable use of plastic and finding innovative solutions.
Any concrete examples of that commitment?
Yes, quite a few, actually. They're aiming to boost renewable energy use significantly, from around 21% last year up to 35% of their total energy needs. Already, 26 plants have some renewable source, solar, wind, or hybrid.
That's substantial.
They're targeting a 100,000-ton reduction in carbon emissions and a 24% reduction in the carbon intensity per ton produced. They're also focused on reducing their water footprint through recycling and reuse.
And something about being first in their category.
Yeah, they highlighted being the first Indian company in the building products category to commit to the Science-Based Targets Initiative, SBTI, net zero target. That's a serious, externally validated commitment.
Beyond the core business, there's also the Supreme Foundation.
Right. Its motto translates to happiness and peace for all, and it focuses on practical initiatives, supporting education with infrastructure and training, rural development projects, healthcare initiatives, and environmental conservation like tree planting and plastic recycling awareness.
So it paints a picture of the company trying to live up to that mission of adding real value to society.
Exactly. It gives you a more holistic view beyond just the quarterly profit and loss statement.
Okay, so let's try and synthesize this for you, our listener. What's the big takeaway from this deep dive into Supreme Industries Q1?
Well, I think it shows a company that's clearly facing some short-term headwinds. The raw material price fluctuations, the early monsoon impact, these definitely hit profitability in Q1.
Right, the numbers show that squeeze.
But, and this is the fascinating part, they're simultaneously making really bold long-term strategic bets. The Waven acquisition and tech deal is huge. The organic expansion, the new products, the sustainability drive,
All funded internally.
all funded internally from that robust cash flow. So you see resilience. You see a company leveraging its strong foundation, built over decades, to not just weather the storm, but actively invest in significant future growth. It's a balancing act.
So for you, the listener, this isn't just about Supreme-specific numbers. It's really a case study, isn't it?
Absolutely. It's a window into how a large, diversified manufacturing player navigates a really dynamic market, how they handle commodity cycles, how they adapt to unexpected things like the weather, and crucially, how they allocate capital for the long haul. It's about strategy in action.
It really highlights the importance of that solid financial footing and strategic foresight.
So here's a final thought to leave you with. Given the Supreme Industries Limited's huge investment plans, the acquisition, the CapEx, all funded internally, despite a dip in quarterly profit, what does that really tell you about the enduring power of strong, consistent cash flow and strategic vision when it comes to navigating market volatility and building for the long term?